of time. This is the most irritating aspect. Is asking something you don't know, you have started looking for it. You want to say that, sir, in this particular case, you cannot use this comparable because there is a related party transaction exceeding 25%, but where is the calculation? Even if you have kept the calculation on a plain piece of paper, the officer would like to have his comfort by going to the annual report of that comparable company. So in the annual report of that comparable company, if you have kept it flat, you can immediately show it to him, sir, this is the calculation that I have made. Kindly refer to page 73 of this comparable company's annual report. This is the list of transactions. It is like this. Comparable number 19. There are 20 comparables. Comparable number 19. You say that this should be included. TPO says that it should not be included because functionally they are different. No, sir. This is functionally similar. We have gone through it. Please see. And then what is offered is some pages, some extracts from annual report, some extracts from the website, which is highlighted with the highlighted pen. But these are not the details for which the TPO is looking for. Now there is something called Companies Act, and there is something called Indian Accounting Standards, where statutory disclosure is to be made about the functionality of a company. This company is doing this, and that is a statutory declaration. The company cannot go back and say that, no, we have done something else. In the annual report, company will say so many things. And also there is no prioritization. But here, whether in this or whether in the generic product disclosure, there is prioritization. The important thing has been declared. Website is a dynamic thing. It keeps on changing. So we are always looking for something which has got some legal base. And then it will act as a perfect alibi. You are relying upon it. Now alibi has to be valid. Now this is the type of work that we do not get. Now these are the two samples only. There can be so many examples which I don't want to get into those things. The idea is that you try to step into the shoes of the other person, and that can happen only when this is transparent. You have trust, there is trust, mutual trust. He has to look into everything, and actually there is no benefit in getting an order done by hoodwinking the officer. In the short run, you may gain something. But most of the successful professionals in this field today, some may be very honest, some may not. But when they were struggling, when they were young, two things were always there with them: hard work and integrity. They approach this profession with two things. Most of the successful people may not be the topper of their batches. But if you are, over the years, the confidence and trust of the officer, and the officer knows, and the word goes from one person to another person, that yes, Mr. So-and-so or Miss So-and-so who is coming, whatever is there, she will get the truth. You don't have to be a topper of the class. But the most difficult thing that you have to believe in honesty, in truthfulness. And you may not be successful initially. You will not get shortcut to success. But in 20 years' time, you will earn a reputation for yourself. In this profession, we make our career this way, slowly. This is not 2020, this is a test match. So I was as I was dealing with the approach and expectations, I have read certain subjects, certain theoretical basis, and although it is not explicitly asked, but I discuss it because I know people are curious. What is the approach of the department, especially transfer pricing department, on adjustments related with share prices? It's a very simple case for us. We look at it very differently. What we do, as I told you, that founding principle of income tax is not income but ability to pay. Similarly, the founding principle of transfer pricing is not income. It is the arm's length principle, that every transaction has to be compulsorily done at arm's length. And this has been discussed in detail in OECD guideline, in British commentaries, in US commentaries, that it is the arm's length principle which is paramount here in this chapter. Once we accept that in chapter 10, arm's length principle is paramount, then how do we tackle any variation from arm's length? Now, first thing will be computing the variation from arm's length. Once we have computed, different nations have taken different approaches to deal with the variance. In some countries of the world, they ask the taxpayer to bring the money of variance within a stipulated time and pay interest, and after a certain time they take a strong action even to the extent of prosecution. This is different from Indian approach. Now, approaches are not material. You may have different approaches. What is material is whether there is any variation from the arm's length principle or not. Since you people have some background on TP, you would have gone through OECD guidelines also. In the initial chapters itself, it is discussed that transfer pricing variation can take place for non-tax reasons. So if it is taking place for non-tax reason, will we take action or not? That is a question. Now, it is also further said that no matter, in all such situations, the arm's length price is to be exacted. That is to be approximated. So the revenue believes that whenever there is a share transaction and there is difference between the arm's length price of the share and the reported price or the transacted price of the share, we will make transfer pricing adjustment. This is the view of the department. This view has been taken. Now there are situations where there is litigation which we are fighting in various forums, from DRP, ITAT, CIT appeal, High Court also. What will eventually come out, I do not know. That's a separate thing. Important was to understand our perspective. This perspective is based on such a simple thing. If you closely examine heads of income, now we have 4 or 5. Now there is no point to discuss income from house property and other sources, because other sources there is an exhaustive list. So capital gain and business from profession and something. Microscopically examine the wordings over here. The variance from arm's length price to transfer price does not get captured under these two heads. But for last 10 years, since 2002, we have been making transfer pricing adjustments without having an explicit head of income or charging section. So what does this mean? This simply means that chapter 10 in itself is a complete code with charging powers, and this is our difference. There is an interesting, because I believe this has become very serious. Interesting judgment which happened last year from the Supreme Court. It said that even if you are living with a girl in a live-in relationship and there is a child, then the child will have all the rights in your property as if it were a legitimate child. So now, for errant boys or girls, it is no longer, this freedom is no longer available that you are there and then you move on. You create something, now that something will come after you. So if you are undertaking a transaction knowingly at a price which is not arm's length, the child of the variance will always come after you. Any more questions? Because I would like to hear from you.
Throughout this 5 days of elaborate discussion, we have been told that this chapter 10 is a machinery provision. It is for the first time that we have come across a stand that this is a complete code with specific powers to tax or charge. Something more on this, please.
Yeah, this is a good question, and good that you asked me. In the writ petition of Vodafone and Shell, drafted by two different people but rated by Harish Sharde, and he is very expert. It is an admitted position that chapter 10 is a separate code and it has charging powers. They are disputing certain other things. They are saying that no income comes out of share premium, but they have not disputed the implicit charging powers. That is one thing. Second thing, as I told you, when you go back, please read carefully, slowly, breaking it in word by word, the charging section and the heads of income, and then tell me whether variance in arm's length price and transfer price get captured under the existing heads. We found that it does not get. Therefore, it has to be the charging mechanism also.
Sir, in case of 100% subsidiaries,
Yes.
how does it matter at what value do you invest?
Good, good. How old is your son?
One is 8, one is 15.
Okay, 15. So in 3 years' time he will be adult. Good. Now supposing there is a property distribution, redistribution in the family. So whether you are governed by Dayabag or Nikashya, will you give your child who has become adult and is asking for his share anything which is less than his due? Or any child, some of you are adult, if the parents are giving. And it's a question of principle. On the question of principle, whether you will accept anything less. A child is a part of you, part of both the parents. You have spent money on him, you have spent your days on him, you have spent your nights on him. And then he is there at 18. But by the conventional law, traditional law, as well as the written law of this land, he has equal share. Therefore, 100% subsidiary, which is nothing but the flesh and blood of the holding company, when it comes of age and there is a transaction which is based on certain principles, then the principle of arm's length has to be followed. Second part of this. In one case where we have dealt with this issue, the SSC company before TPO was 100% subsidiary and the holding company was in Mauritius. When the shares were issued by the subsidiary company to the holding company, the shares were issued not at par, but they were issued 800 times above par. 800 into 10, 8,000 something. So why this son, or 100% subsidiary, thinks it appropriate that I will charge my father or the holding company at a rate which I believe is market rate. When you have been found with that capital, and initially the professionals have also come to do it for you. Now today you have become strong. Still you do not have any other shares, and still the transaction you yourself are doing at 8,000 plus. Simple reason is that any share transaction, forget about the transfer pricing. The Companies Act is there, the FEMA is there, the RBI is there, and forget about all these also. Normally, if due diligence is taken, then it will happen only at arm's length. And that is why the company at its own level did the valuation at 8,000. We did it at something like 50 or 60,000. Dispute is between whether 8,000 was correct or 60,000 was correct. The dispute is not that it is immaterial whether the transaction between holding company and subsidiary company needs to be at par. No, that's not the issue.
So, but the issue is that the subsidiary say needs 1,000 crores. Now, whether I issue 1,000 shares of 1 crore each,
I got it. No, that's a good question. That's a very good question. Now, what happens is, and this is the question which you people have to ask the CFOs or the CEOs, that brother, if you are going to do a transaction, now the times have changed. You do an act, आप मर्डर करके आ जाते हो, उसके बाद कहते हो कि मुझे बचा लो. No. We have to move to a situation wherein in certain class of transactions you have to take the prior approval of your in-house CA or outside experts. That my intention is to infuse 7,000 crore. Okay, what is the arm's length price? Arm's length price is 2,500 rupees per share. Accordingly, I will take lesser number of shares and avoid this kind of situation in the hands of tax administrator. You people have to drive it and aggressively drive it to the CFOs and CEOs that you cannot take taxation for granted. You cannot take us for granted, you cannot take the administration for granted, otherwise they will come back, and when they will come back harshly. Supposing there is a genuine transaction where the intention indeed was to bring 800 crores only. and the assessee should have settled with lesser number of shares. The AE should have settled with lesser number of shares. But the TPO is making a statistical adjustment of 8,000 crore. It's going to be very heavy. So it's going to be heavy because certain things were not taken in or understood in right spirit.
Sir, again the question is whether I am issuing it a 10 or a 100 or a 1,000, what makes the difference? If my 100% subsidiary is there, okay, what makes the difference?
Yes, it makes the difference. When
Because let's say I am issuing a 1 share or 1,000 shares, okay, I am infusing the capital, okay, later
yes, I'll tell you what is the difference. The difference is when the company gets dissolved, you are bound to return the money to the shareholders. So if more shares are issued, you have to attempt to return to all the shareholders, to all. But if there is lesser number of shares and more money in share premium, then you do not have that situation where you have to return the entire thing. The company has done good business or company may not have done good business, it may be into bad situation. There will be liability to return only the share capital, not the share premium. And here there is a design sometimes. What is the design sometimes? That I am putting this much money into India. It may work, it may not work. In case it is not working and the company is dissolved and there may be liabilities. Okay, the reserves will be used to pay the liability.
And that is the last.
That is the last.
And that is the equity, which, whatever the residual assets are there, after paying to the outside liability and security liability, then you have to pay the equity shareholder, whatever is asset is there. So again my question is, sir, what is the difference if the 100% subsidy is there? Okay, whether I am issuing it a 1 rupee or a 1,000 rupees?
This is the difference that is coming. See, this share premium which is there. Now share premium we put, where do we put? We put it on the liability side. But also correspondingly, there is entry on the asset side. For the share premium, we don't have to return it necessarily. But share capital, if one person stands up, he says, you will have to think, उसको देना है कि नहीं देना है. लेकिन उसका 10 रुपया मैं दे रहा हूँ और 150 रुपया शेयर प्रीमियम है, मैं मना कर सकता हूँ, मैं भी 150 रुपया नहीं दूंगा, तुमको 10 ही रुपया दूंगा.
नहीं सर, शेयर होल्डर को तो पूरा पैसा
ये तो डिपेंड करता है ना कंपनी का क्या सिचुएशन आउटकम है.
इक्विटी पर शेयर जो वैल्यू है वही उसका.
हाँ, that is the question. भाई when the company is being dissolved, at that time you are doing the valuation. क्या आ रहा है पर शेयर, क्या हो सकता है? There can be a situation that per share there is only 2 rupees coming.
सर जितना शेयर होल्डर है वो एक शेयर होल्डर को ही जाने वाला है.
उसको ही जाएगा ना.
सो क्या फर्क पड़ेगा?
फर्क पड़ेगा. फर्क ये पड़ेगा कि भाई आपका जो शेयर प्रीमियम आया है, that share premium could have been utilized. Now there can be couple of situations, multiple situations. There can be a situation of profit. You are, instead of 10 rupees that you originally invested, you may be getting 50 rupees. And there can be a situation that instead of 10 rupees that you are getting at the time of dissolution only 2 rupees. But before dissolution, certain stages will come. Now certain stages, if supposing there are various kinds of assets which are created, there are various kinds of liabilities which are to be paid. Now these things, when you have the reserve, you are utilizing the reserve for certain purposes. The shareholder can ask money on 2 situations. One at the end, one a particular shareholder can ask in between also. This is again a situation. In between also some shareholder is asking. And the board may not always say that we will not give you the money. So these complicated situations are there in which certain situations arise. That is one thing. This is from the perspective of the promoter. Now from the perspective of an outsider and partly from the perspective of the promoter, the difference that it creates is, if 3,000 crore rupees are coming by way of share premium and 1,000 rupees is coming by way of share capital, this 3,000 crore rupees, whatever it has come, if the transaction were not at arm's length, still the 4,000 rupees would have come, but it would have been in form of share capital. What we look at is that whatever is quasi liability is also quasi asset. This is what we people look at. Because if a person is half a girl, he is also half a boy. Therefore, what is your argument that, sir, this is on the liability side? Why you are taxing me on this? I say that if this is on the liability side, it is also sitting on the asset side, and by sitting on the asset side, what it is doing is that it is either getting employed in the business. If it is getting employed in the business, even if the business is into losses, it is generating indirect taxes, it is generating employment, salary, and it is having a multiplier effect in the economy. If the entire thing is not put into business for say 2 years, then for 2 years that entire money will not be kept in a steel cupboard. It will be kept in some bank where you will earn interest. The company earns interest. Bank gets this at lesser rates. Bank advances it at higher rates, so bank earns money. Indian banks earn money, advance it to people who are wanting some more funds, and then the economy has a certain effect. It is because of this that in the transfer pricing, prior to amendment itself, we have the word impact or effect upon income, profit, loss, asset. Now, present income as well as future income, both are adversely impacted if a nation is deprived of the share premium. And that is why we try to check this kind of transactions which are not happening at share premium.
Sir, also in case of transactions of various purchases that you're doing from an AE outside India, what has been really been the process is that you try to compare this with another set of suppliers, and wherever there is a difference which is adverse, you just try to add it to the income. But there are so many situations where the price is in favor of the AE. There nothing is done. They just trying to do one-on-one analysis.
Yes.
जहाँ पे favorable नहीं है उसको छोड़ दिया तो.
That's a very simple thing. How regulators look at it. You start from Borivali to come to Churchgate. On the way you have got 50 traffic signals. You obey 48. You disobey 2. Now will the person who will give you ticket give you adjustment for 48 that you have
Sir,
obeyed?
ऐसे नहीं होता है. Practically for the SSE it is so difficult के हर दिन का price कैसे decide करेगा? When the price is decided sometimes for a period, because the fluctuation in prices, एक ही दिन का gold का price भी 10 different prices आता है.
Yes.
So at no point of time the SSE is looking for a tax advantage
No,
or an
see
arbitrage.
that point is different. This point that you are now saying is different. In a day there can be so many prices. Supposing you are examining cup, gold price is given. Intraday variations are many. On most occasions, the intraday variations are not so huge.